Hello and welcome to HiWayFX market news for January 14, 2016. During the last days, the Euro-US dollar pair traded in the small range 1.08 to 1.09. On Thursday, the euro trades below the level of 1.0870 by losing 0.1% against the American dollar. The market's participants are waiting for comments from Chairman of the European Central Bank and the Federal Reserve regarding their monetary policies. As soon as traders receive the signals, the euro may continue its rebound. The resistance levels for the euro are 1.0924 and 1.0951. On the other hand, if the Federal Reserve continues to hike interest rates, then the euro-US dollar pair may fall to the new lows. The support levels for euro-US dollar pair are 1.0817 and 1.0790. Today, during the European trading session, the Australian dollar rose against the American dollar by adding 0.2%. The Australian dollar-US dollar traded around the level of 0.6970, but still below the key level of 0.700. The Australian dollar-US dollar pair got benefits from the strong data from the Australian labour market. Annette Beecher, Chief Asia-Pac Macro Strategist at TD Securities, notes that the Australian employment was flat in December, minus 1K, after blockbuster October-November prints upgraded to plus 130K combined. The unemployment rate at 5.8% was unchanged from the prior month. The market shrugged off the report as it wasn't strong enough to counter today's overall soggy tone. Australian dollar spiked but wrestled to $0.693. However, the Australian dollar is still under pressure due to falling commodities prices and slowdown of Chinese economy. The resistance levels for Australian dollar-US dollar pair are following 0.7008 and 0.7026. The support levels for the Australian dollar are 0.6910 and 0.6875. On Thursday, US crude oil trades on the green area. Oil rose to almost $31 per barrel by adding 1.5%. However, yesterday, as Reuters notes, US oil stumbled below $30 for the first time in 12 years, to levels that threaten the survival of many US shale firms, spur more belt-tightening by oil majors, and spell more pain for crude-producing nations and regions. A 7-day losing streak fueled by concerns about the continuing supply glut and fragile demand from China, the world's #2 consumer, wiped out almost a fifth of crude prices this year and 70% since mid-2014. Another negative signal for the oil was received yesterday when the US government data showed stocks of gasoline in the United States went up by 8.44 million barrels in the week ended January 8, 2016, following a 10.5 million rise in the previous week and higher than market expectations of a 2.8 million gain. This is the biggest two-week gasoline inventory build in history. The key resistance levels for the bulls are $31.50 and $33.20. The support levels for oil are $30 and $28.80. On Wednesday, the Standard & Poor's 500 index slid 2.5% to 1,890.28. It was the lowest close since September 29th. This morning, the index has rebounded to the level of 1,900 by adding about 1%. As Bloomberg notes, it was another volatile session following yesterday's whipsaw action in which the S&P 500 capped its first back-to-back advance in 3 weeks. Concern that turbulence in China's stocks and currency will spread to the global economy, just as the Federal Reserve is increasing borrowing costs, has spurred declines in markets in 2016. The S&P 500 posted its worst than ever start to a year, sliding 6% last week. The benchmark has declined 11% from its record set in May and is just 1.2% above the bottom of an August swoon, which was also sparked by anxiety over the impact of China's weakness on worldwide growth. According to JP Morgan Chase & Co., this year's tumble is at least partially attributable to robotic selling by quantitative investors who were forced to rebalance their funds when stocks and bonds fell in January. The resistance levels for S&P 500 index are 1910 and 1940. The support levels for index are 1895 and 1880. Stay up to date with all the key financial news around the world by liking us on Facebook, following us on Twitter and Instagram, and subscribing to our YouTube channel. For more information, please visit our website www.HiWayFX.com. Thank you and have a good trading day.